All right, so picture this. You start a side hustle to escape the 9 to 5 grind, and you set up an LLC because that's what you're supposed to do, right? But, a few mistakes later, zero guidance, and you're stuck with a kind of joke of a business entity that won't generate any tax savings and, quite honestly, won't protect you if you were to get sued. Does this sound like a familiar story for you? Welcome back to the channel. I'm Harrison Patton, founder of Kaizen Accounting, where we provide tax and accounting solutions to business owners with our outsourced model so that they can save money and pursue their entrepreneurial dreams. So, I'm not here to tell you all the boring accounting jargon and legal talk of how to set up an LLC, but rather I'm here to help you and save you from making the mistakes that'll cost you thousands in the long run. So let's get right into the topic of today for how to set up an LLC. So mistake number one that I often see people doing is they're rushing into creating an entity for their business. A lot of people want to set up an LLC because it's quick and easy online and because everyone's doing it. And I think that that's a advantageous idea to have, but it can also just be a wasted effort. An LLC isn't just something that you can click a few buttons and boom, you have asset protection and tax savings. That's sadly not how it works. There's a few more steps that you have to go through in order to ensure that you get those advantages of an LLC. An LLC isn't always step one. If you've got liability, yes, it's helpful, but it's more than just clicking a few buttons in order to get that asset protection. And if you don't have consistent cash flow, it might just be best to wait. In some states, there's a minimum filing fee, there is minimum annual tax fees that you have to pay, such as in California, the minimum LLC tax is $800. So at the end of the day, if you set up an LLC, you might not need it, and you might just be losing cash when you don't have cash flow in the first place. Here's what I would suggest is just don't jump the gun. You can operate under a sole proprietorship for a while. Now, if you have an operational business or rental property, that's worth setting up some sort of entity from the get-go just to make sure that you're protected and that you don't individually get sued. But if you're an online marketing company or a SaaS company online, you might not need to rush into getting an LLC right away until you get that consistent cash flow and need to be protected. What you can do is just operate as a sole proprietorship, and this saves you from the hassle of setting up an LLC properly. And when the time comes, you can make that switch into being a single member or multi-member LLC. Mistake number two that I often see with clients and people that I talk with is thinking that an LLC is what saves you money on taxes. So by having an LLC, you don't instantly save money on taxes. Rather, an LLC is an entity that allows you to take advantage of strategies that can save you money on taxes. For an example, think of a freelance designer named Sarah who nets $60,000 of income. She doesn't document any expenses and she expects to still receive a tax cut. Sadly, that's not how it works, and Sarah will be paying tax on all $60,000 of that income. A single member LLC such as Sarah's is still taxed as a disregarded entity, is the label that it is given, which is essentially still as a sole proprietorship on a Schedule C. So same 15.3% FICA tax, same Schedule C, same situation as before as you were working as a sole proprietorship, just with asset protection. Now, an exception to this is if you are an LLC that makes an S-Corp election, which is where you can save money on FICA tax via a reasonable salary and owner's distribution split, but that's a topic for another video. So, what's the solution for this issue? You either want to keep track of all of your business expenses and work with a tax strategist such as myself to find ways to save money on tax, or if you're simply looking to just make an entity election and use that as your driver for tax savings, then you're going to want to make an S-Corp election, which I recommend doing once you get to in the range of $40,000 to $50,000 of take-home profit. Mistake number three that I often see in clients, and this happens far too often, is not having proper formation documents. So this means the people that just go online and click a few buttons and they're registered with the state, but they don't take the time to fully write out the formation documents. So essentially, without a proper operating agreement, you don't get the protection that you're looking for, and you're basically a sitting duck for lawsuits, God forbid if one of those were to happen. I recently saw somebody on X that was bragging about getting their LLC set up DIY'd just by themselves for $99, which is just the state fee that they had to pay. And that's great and all, but he didn't have any operating agreement and he didn't have any other formation documents. So at that point, he's just a sitting liability. His rental properties have him completely exposed to a lawsuit. The revised Uniform LLC Act basically says if you don't have your formation documents, then you don't really have a proper entity that's going to give you any sort of protection. And without protection, there's no corporate veil, which means that if your business gets sued, they can come for you and they can take your personal assets along with anything the business owns. So here's my recommendation for making sure that this isn't you. We don't want you to be like this guy on X. We want you to be fully protected. So what you're going to do is you're going to have a professional tax attorney be the one to write out the operating agreement and all the other formation documents when you set up your LLC. For a partnership LLC, this is especially essential because you want to make sure that you have everything documented so that any handshake agreements and everything are on paper, and any future disputes will be handled because you have it written down. Now this might sound like more money up front, which yes it is, but it's well worth the hassle and it can save you thousands upon thousands on the back end in lawyer fees. So it's something I would highly suggest you doing. So if you need help with doing this, you can click the link down below and I will help you get set up with my most trusted law firm, and they'll get you taken care of and everything and get you fully protected in your entity. Just remember, it's awesome to make money and it's awesome to save money through tax planning, but what's it all worth if it's not protected? And I'm here to help you bulletproof your wealth. Mistake number 4 that I see way too much, and it honestly disgusts me that people still preach this, is setting up your LLC in the wrong state. Most people think that because some guru said so, they should set up in Nevada or Wyoming or Delaware because they're more friendly for LLCs. Which, yes, is true. They are more friendly states for LLCs. But if it's not the state that you're in, it does nothing for you. So here's what I mean by this. So, for example, take a guy named Mike that is a retailer in Colorado, but he set up his Wyoming LLC. If Mike were to get sued, he wouldn't get the more business-friendly law of Wyoming. He would get the laws of the state that he operates in, which is Colorado. The reason for doing this Wyoming LLC is for these friendly laws towards LLCs, but at the end of the day, you're not even getting to reap the benefits of them because it's not where your business is actually taking place. So here's the play, really. You form your LLC in the state that you're operating in. If you're doing business in Florida, set up a Florida LLC. If you're doing business in Texas, set up a Texas LLC. Don't let these gurus trick you into otherwise, because it's just going to be a waste of time and extra state fees that you're going to have to pay. So set up in the state that you're operating in, period. That's all it is to it. As a business owner, you don't want added headaches in running your business, so there's no point in doing this. And also, from an asset protection standpoint, if your LLC is in a state where you're not set up, you're going to lose out on that protection. So don't be the business owner that lets some guru online scam you into setting up in a different state because they know best. Keep it simple, set up in the state that you operate in, and ride from there. Your LLC should be your wealth fortress and your opening to tax savings. Keep it to the simple stuff and avoid all these elaborate schemes that people put out there, and you'll be just fine. So just to recap, don't rush into these things. Wait until it's necessary. Number 2, don't expect tax magic. Your LLC isn't what saves you money on taxes. It just is an enabling entity that you can use as a first step in the door. Number 3, don't skimp out on the documents when you're forming your entity. These are crucial for your asset protection and maintaining a corporate veil for the future. Number 4, don't pick the wrong state. Don't listen to the gurus. Keep it simple. Set up in the state that you operate in. So once again, I'm Harrison Patton, the modern tax professional that's here to help you take actionable steps to save money on taxes and chase your entrepreneurial dreams. If you found this content helpful, please be sure to like and subscribe for more videos in the future. And that's all for me. So, all love, HB out.